there's a lot of weight in the system, a lot of, it's a huge amount of capital. It's not like 2017 where it was light and you could push it around. And there's different demand and supply equations in the system now.
On-chain cryptocurrency analyst and investor Willy was recently in an interview where he talked about the increased chances of Bitcoin price prediction failures due to the change in the demand and supply equations and the recent introduction of certain bigger players to the Bitcoin scene. According to the analyst, these bigger players are moving the market at a slower, more measured pace because of the larger capital involved. With many big players such as El Salvador, more big institutions, thanks to Michael Saylor, ETF and futures markets joining the scene, it is clear that 2021 has seen much more complex market activities than what we witnessed in the past. According to Willy, the market is changing rapidly, and it is getting harder to predict how the market will swing in weeks or even days. Welcome to Savvy Finances. This video examines Willy's thoughts on some of the most recent events in the Bitcoin industry, including Plan B's failed $98,000 November price prediction and the effects of futures markets and other recent players on the flagship cryptocurrency's price. The on-chain analyst also believes that the many long positions will make past strip squeezes almost impossible, changing the entire scene. But is this a good thing or a tragedy waiting to happen? Please watch this video to the end to find out. One particularly recent event that took the Bitcoin world by storm is Plan B's $98,000 price prediction for Bitcoin in November. Although some investors doubted the accuracy of Plan B's price prediction, many believed him because he had accurately called Bitcoin's price for the previous months. In the interview the same day that Plan B admitted his price predictions had failed, Willy predicted that the forecast was off the table. He explained that the technical floor model was more prone to breaking than the more stable long-term stock-to-flow model. However, he clarified that the fatal prediction does not in any way diminish Plan B's genius and his many other amazing feats. It is just the way the market moves. Just like Plan B's floor model, Willy's floor model had broken too. Bitcoin currently sits just above $58,000 at press time, and there are just a few weeks left in 2021. There has to be a gigantic squeeze or another crazy fear of missing out mania for such a price increase to occur in the few weeks left. But Willy just does not see that happening anytime soon because of the current market situation. According to the analyst, the current market situation is completely healthy, and there is nothing out of the ordinary. But the bigger players are more long-term investors leaning more towards constant accumulation than the short squeezes that would have helped Plan B's predictions become a reality at such short notice. Willy also adds that the current market situation will not suddenly cause a price pop as we had witnessed in the past, though it is difficult for him to call anything. Seeing as his reputation is on the line and tempers are running high, Willy believes the days of massive run-ups and drawdowns may be gradually ending. Here is Willy explaining this.
It's not going to happen, guys. Sorry, but it's not. Not from what I'm seeing.
No.
And it'd have to be a black swan, or a white, a reverse black swan or whatever to do that. Just there's nothing out of the norm happening here. It's just very constant accumulation by long-term investors. It's looking healthy. It's not like this thing's going to blow out of the water. And there's not enough shorts in the system to squeeze it that fast. We've got longs in the system that need to cool off, and it has been. And so when you've got longs in the system, it's very hard for the price to rise quickly. Fast moves happen from short guys getting taken out and being forced to buy back.
Though not being able to hit the $98,000 prediction might seem terrible, Willy believes the current stability and balance could actually be good for the future of Bitcoin and other digital assets. The analyst explained that there is much more weight in the market now, and it would be near impossible to influence the market or push the weight around, as we witnessed in 2017. He also explained that the advent of futures markets would make it difficult for us to hit the usual fear of missing out and bluff top bubble. These new players do not even have to trade to short the market and collect the massive demand for funding long-term positions, as we witnessed during the mini bear run of February to May 2021. Willy believes the around-the-top mini bear runs followed by progressions up and another bear run might be the new normal for Bitcoin. The cycle will just continue in that manner, 3-month bear runs, progressions up, then another bear run, and so forth. Willy explained that the cycle is being propagated by the shortings and selling downs that have been a big part of 2021. All the big infrastructure players, from miners to ETF and exchanges, are selling down the profit, and their actions certainly affect the rest of the market. Listen to Willy's explanation.
You think of miners, they're an infrastructure component, and they make money, and then they sell it to realize that money to pay for their OPEX. And the same thing with an ETF. They provide a service, and then they're going to make a fee, and they're going to sell it down. Same with exchanges, futures exchanges. Same with Grayscale. So it's all these different demand and supply effects now, and it's a new game. We didn't have that in 2017. Miners were the only game in town, and when they halved, like this step change, built a bullish run, and then we went into FOMO and mania, and there was no shorting to be able to, no real way you could short and cool down the heat of that run up. So yeah, it's different. I think it's very different, and I've been calling this the last cycle. Is in a bit like Michael Saylor. It's going up forever, Laura. It just keeps going and finds its price discovery in a random walk. We did a 50% pullback. You may call that a bear. I actually think that you may have called that a bear market now, like a mini bear market, like recovers in 3 months, rather than the standard Bitcoin bear market, which is like a 9 months or more.
According to Willy Woo, we might also be seeing much shorter bear runs for Bitcoin. The analyst explained that standard Bitcoin bear markets usually last for 9 months, but we have already witnessed one that lasted for 3 months, and it might not be the last one that does. If there is a time to be more decisive about buying the dip, it might be now with the market's current situation. When asked about the effects of the ETF futures on the market, Willy Woo explained that they have changed the supply and demand equations for the digital currency. For one, the ETF futures market is strictly regulated, and all the demand goes through one channel. So there are strict limits. There is also the issue of contango, the result of a higher futures price compared to spot price. The spot price is the current market value of the asset being traded, in this case, Bitcoin. The increased value has also been pushing up more, going from 15 to 20% of annualized yield to around 35%, as expected. This is very attractive to institutional funds and other investors that want a high yield on the US dollar without the high volatility of Bitcoin. Here is Willy Woo explaining this.
Typically, we've had 15, 20% annualized yield by shorting the futures. They're actually taking the CMEs, or the futures ETF through their CME and taking the other side of that paper contract and buying Bitcoin, so you're fully hedged, because those two eventually settle together once it expires. But effectively, the yields from these guys doing the cash and carry, the yield making play, it becomes very attractive. Instead of going 15, 20%, you can go higher, right? Like back earlier this year, I think the cash and carry trade was around 20, 25% on the CME when things was really right bullish. The cash and carry trade on Binance and FTX and those guys were even up to, I think, the 30 to 35 equivalent. There was like a 5 to 10% higher yield because I think a lot of the funds that were playing that game were actually regulated players on the CME in the US, and they were taking the yield. But now we've got, this futures ETF coming in, and they're pushing that contango up, and there's more yield to be had, and that just translates to a lot more interest from institutional players that don't want to be exposed to Bitcoin, but they want to do something better than like 5% from a junk bond, or even worse from a proper, treasury bond.
Instead of having the usual 3 to 8% interest on the traditional low-yield investment assets, these bigger players get way higher with Bitcoin futures, and they will continue influencing the market to suit their purposes. As a result, Willy Woo says we might not see the fear of missing out frenzy that has previously been a huge part of Bitcoin. The players might be different, and the game might have changed a little bit, but the cryptocurrency remains the same. We have seen more mainstream Bitcoin investments in 2021. Hopefully, they are indicative of many other great things to come for the cryptocurrency and all of its investors. What do you think is responsible for the current market situation? Do you think we are seeing the new normal for Bitcoin, as Willy Woo thinks, or things will switch up soon and return to the 2017 scene? Please let us know what you think in the comment section below. Thanks for watching.